Okay, so welcome to my webinar on self-directed IRAs and using a self-directed IRA as a pathway into alternatives. And I'm going to share my screen and we'll get started here. And so you can see the title of my presentation, Unlocking Investment Potential, Self-Directed IRA and Alternatives, the self-directed IRA as a pathway to alternatives. And just by way of disclosures, I am a licensed agent in the state, real estate agent in the state of Georgia. My company is Innovative Properties Group. I am with the RE/MAX Town and Country brokerage in Canton, Georgia, and my business partner and I are both associate brokers with RE/MAX. Our investment company is Alpha Dog Capital, and I am the manager of this investment company. And we also have a property management company, Georgia Rental Group, and my business partner is the broker of that company. Some disclaimers. This presentation is for educational purposes only. It's not financial, legal, or investment advice. And it's not an offer to sell, buy, or promote any security or investment strategy. Any mention of specific investments or strategies is for illustrative purposes only and should not be considered as an endorsement or recommendation. So some introductory remarks about me. I am John Marion. I spent 26 years in the nonprofit world before I got into real estate full-time. But while I was still in the nonprofit world, I did become a real estate investor in 1999. I owned some rental property. I invested in some raw rural land in Virginia, where I learned about the timber industry. And this is when I lived in the Washington, D.C. area. And I learned to put deals together. I learned to analyze real estate as an investment class and put deals together that were profitable. And then I moved to the Atlanta market and became a full-time investor prior to moving here. But shortly after moving here, I did get my license and I became an agent and then an associate broker. During the housing crash in 2012, 11, 12, 13, in that time frame, I had a hedge fund client who used our brokerage to identify and analyze single-family house deals here in the Atlanta market. And I learned a lot by working with them and by analyzing analyzing the deals using their spreadsheets. So it was an education to understand how they were evaluating the properties that they were buying. And so I gained a lot of knowledge and insight into the market from an investment perspective during those years. I've been a private equity fund manager for the last couple of years. This is something I've wanted to do for many years. And a couple of years ago, I began that journey and currently have a fund and am the fund manager. I'm going to be mentioning both the Securities and Exchange Commission and the IRS in this presentation. I just wanted to give you a heads up about this because federal regulations guide both the alternative investment world as well as the self-directed IRA with the IRS regulations. So you'll see these government entities pop up in a couple of slides during my presentation. So let's start by comparing and contrasting two different types of IRAs. And this slide that I'm showing right now is really the reason I am giving this presentation, because there's been a lot of confusion as I talk to investors and I mention investing with a self-directed IRA. It turns out that many people think they have a self-directed IRA, but in fact, they have a self-managed IRA, and there's a big distinction. So self-managed IRA is like a typical IRA that you can have managed by a professional, or you can manage it yourself and decide which stocks to buy, when you're going to enter positions, when you're going to sell. But you're really limited to what is called traditional assets. And these are public offerings, typically Wall Street, the world of Wall Street, and stocks and bonds. So that's the stock market. A self-managed IRA, you can work in that world all you want every day. But a self-directed IRA is something different. A self-directed IRA, when you fund this opportunity, this investment opportunity, alternate assets are opened up to you. These are private offerings. These are technical term private placements. These are private shares that you can buy in private companies that you cannot buy with a self-managed IRA, where you're limited with stocks and bonds, but you have to have a self-directed IRA in order to participate in alternative investments. And just taking a little bit of a deeper dive into traditional assets, comparing them to alternatives. Traditional assets, we're talking about the stock market. This is open to everyone. The share price is relatively low. It is low. Has high degree of liquidity. You could have gotten into a stock position when I started this presentation. You could have exited it. You could have entered another one, exited it, and even be getting into another one now, or even more than that. It's highly liquid. You could be buying and selling as the stock market's open just every minute of the day. Alternative assets, on the other hand, these are private placements. They're invitation only. The share price is relatively high compared to the average stock price on Wall Street. And these typically can be $25,000 shares, $50,000, $100,000, $1 million, $10 million. They could be very high priced shares. And I've seen them as low. I think the lowest I've seen in the types of funds that I'm talking about is about $10,000. But that's kind of a low entry point. And I don't see that too much in the types of funds that I'll be describing. The funds are locked up 3 to 5 years usually is the minimum time. I've seen funds that require the money to be invested for 7 to 10 years, and there probably are some projects that would take even longer than that. Just to give a size of the alternative investment world, 87% of U.S. companies with more than $100 million in revenue are private. These are private companies. You can't buy shares in these companies by investing in Wall Street stocks. Private funds are growing at a faster rate than the stock market, and most commercial deals are actually done with private money. So the private investment, alternative investment world is huge and is hidden from most investors. And I'll explain this in a few minutes. Alternative assets have a high share price, and the funds are locked up for a relatively long period of time. So these two features make a self-directed IRA an ideal diversification pathway into alternatives. So let's just look at some of the rules and regulations that the Securities and Exchange Commission has in investing in these types of deals. And just a couple of technical things. You can look this up if you want. You don't need to know what I'm going to say in the next minute in order to invest in alternatives, but they do drive what opportunities might be available to you. So this Regulation D of the Securities and Exchange Commission, we have two funds primarily that I'm looking at and talking about today. Those are 506B funds and 506C funds. And the Securities and Exchange Commission has a definition for what is an accredited investor, who is an accredited investor, and it's very clear guidelines. And specifically, in a nutshell, this is the most relevant part of this for most people. It requires an investor to have annual income of at least $200,000 and a net worth of $1 million, at least $1 million. And that net worth cannot be in your primary residence. So that's $1 million of net worth in addition to your primary residence. And then a little caveat to this, a married couple can qualify with a minimum income of $300,000. On the other hand, the funds that are 506B funds allow non-accredited investors. 506C funds are only accredited investors can invest in these deals. And you actually hear more about these deals, but you're locked out if you're not an accredited investor. Non-accredited investors can invest in 506B funds. And sometimes the term that's used, they should be sophisticated investors. Even though they're non-accredited, they should be sophisticated. And the definition of that is really not precise, but this is a pretty good one. Investors with sufficient knowledge and experience in financial and business matters to make them capable of evaluating the merits and the risks of the prospective investment. So this requires, non-accredited investors who want to invest in these types of private deals have to be people that are knowledgeable about investing in the business world, or have some kind of a knowledge and life experience, so that they can evaluate these types of deals. And you can't get in without at least some kind of a criteria where you can demonstrate that you're capable of evaluating the investment deal that you're looking at. So there are 3 benefits with investing with a self-directed IRA into alternatives. And I'll be speaking about each one of these: investment autonomy, diversification opportunities, and control over investment strategy. So let's start with investment autonomy. A self-directed IRA empowers investors with the ability to make investment decisions beyond traditional assets like stocks and bonds. This flexibility allows account holders to explore a diverse range of investments, including real estate, private equity, precious metals, and other alternative options. This is like a get out of jail free card for your retirement funds that are trapped in traditional stocks and bonds. Let's take a look at this. So with a traditional IRA, you're limited to what you can invest in, and it's mostly stocks and bonds that are listed on the exchanges that are controlled by Wall Street, and these are public markets. But the private investment world is like a members-only club, and it's hard to get into this club. It's a private club. This is where the best deals happen, and you are not invited. And the only way to get in is to know somebody who's in that world. But a self-directed IRA is your ticket to get inside if you know somebody. And this is especially true if you're a non-accredited investor. Accredited investors, because of the very nature of what their net worth is, start traveling in circles where they learn more about alternative investments and have opportunities to invest in these 506C funds where accredited investors only can invest. But the 506B funds that allow non-accredited investors, those opportunities are never advertised. As a matter of fact, their advertising is prohibited in these types of funds that non-accredited investors can get into. So it really, between the fact that your IRA is limited to traditional investments, and the fact that it's very difficult to learn about these alternative investment opportunities when you're non-accredited investor, makes it a very hard world to actually get into and find out about opportunities. So the self-directed IRA allows you to get into, gives you the autonomy to get into alternative investments. Let's look at diversification. Unlike conventional IRAs, a self-directed IRA enables individuals to spread their investments across various asset classes. And we'll talk about some of these investment classes later on. You're not limited to Wall Street stocks. This diversification can potentially reduce risk and enhance the overall stability of the portfolio, as investors can tailor their holdings to align with risk tolerance and investment goals. Alternative assets provide greater diversification opportunities. Self-directed IRA is a smart pathway to get into alternatives and get greater diversification. So let's now talk about control over investment strategy as a benefit of using an IRA. With a self-directed IRA, investors have greater control over their investment strategy. They can actively manage and adjust their portfolio allocations based on market conditions, economic trends, and personal financial objectives. And control is the key word here. This hands-on approach provides a level of control that goes beyond the typical constraints of the more traditional retirement accounts. A self-directed IRA gives you much more control than a self-managed IRA that is limited to stocks. So these are the three benefits of investing in alternatives with a self-directed IRA. Now let's talk about some of these alternative investment examples. The number one alternative investment is real estate. So the question is, why is real estate the number one alternative investment? And why is it the favored asset class of the wealthy? Well, let's look at how the wealthy invest in alternative assets and real estate in particular. So in this chart, you can see three columns. The middle income column are people that have a net worth of less than $500,000. The upper income column are individuals that have a net worth of between about $500,000 and up to $10 million. And then the ultra rich have a net worth of $10 million or more. And I actually want to start at looking at this this column on the right for the ultra rich, because it's easiest to see that green portion that says 49%. That's the allocation of the net worth of the ultra rich that they put into alternatives. And this is businesses and this is real estate. You can see the upper income, 24 to almost 25% are in these alternative asset classes, including real estate. And then the middle income, they have a much smaller portion of their net worth in alternatives. So participating in alternative investments as wealth grows can be a strategic decision for some individuals seeking to accelerate wealth creation. It's kind of has a small snowball effect. As your wealth increases, you have the opportunity to get into alternatives. And as you get into alternatives, your wealth begins to increase, accelerated increase in wealth generation. So real estate is the number one asset for a number of reasons. It creates wealth, offers high yield returns, produces cash flow, protects capital, is a hedge against inflation, and is not correlated with the stock market. And this is a very important concept in alternatives. The fact that they're not correlated with the stock market, and real estate in particular is just an excellent way to diversify into an asset class that is not correlated with the stock market. And I took a deep dive into this. I've got a 12-minute presentation where I go over 60 years of house prices and compare that to the stock market and what happened each time since 1963 there has been a recession, and how the stock market gets impacted by the recession or doesn't get impacted by the recession, and how the recession impacts the stock market. And if you'd like a copy of that or want a link to that video, just let me know. So looking at all different alternative investment examples, real estate is the number one. Precious metals, this is of course like silver and gold, could be platinum. There are other obviously precious metals, but mostly silver and gold. Cryptocurrency. So with the self-directed IRA, you can invest in cryptocurrency. Money lending is huge. I know a lot of people that become money lenders for real estate investors by using the cash that they have in a self-directed IRA, and they get a better return on their investment by being a money lender. Some other examples of alternative investments: life insurance, art, alcoholic beverages, collectibles, and here's the IRS. I put them up here. The reason 4 of these items are in red on this slide is because those are prohibited by the IRS for you to invest using your self-directed IRA. So you can invest in them as an investor, but you can't use a self-directed IRA in these types of investments. So if you're new to the world of alternative investments, these probably are not the kinds of things that you would want to get into too quickly anyway. Things like art and fine wine and collectibles like antique cars or baseball cards or whatever the collectibles might be out there, antiques. They're very specialized asset classes and really is not something that a new investor, somebody who's new to alternatives, would jump into. Real estate is the most natural asset class to get into as an alternative because most people understand real estate. Just about everybody lives in a house or owns property, whether it's a condo, a townhouse, whatever. But even if for those who don't own a house, they're usually obviously living somewhere. So people are familiar with real estate as an asset class, and that makes it a perfect entry point to get involved in alternative assets. So there are 3 simple steps to creating a self-directed IRA, which then opens the door and creates the pathway for you to invest in alternative investments. And these steps are: open an account with a custodian, fund your account, and then invest in a deal. And it's really that simple. And opening an account with a custodian is very easy. I have an example, American IRA. That's simply just a company that I use for my self-directed IRA. There are many others out there. It's not necessarily an endorsement for them. I'm happy with them. If you go to their website, americanira.com, there's a lot of educational material on there about self-directed IRAs and alternative investments. But you can open an account in any company like American IRA that is set up for you to invest in alternative investments and alternative assets. And again, a self-managed IRA will not allow you to do this. So it's really important that you find a custodian that you can put some of your retirement money into a self-directed IRA, and then you can use those funds to invest in private equity opportunities. So my information is on our website, alphadogcapital.com. If you want to contact me, my phone number, my email address is there. You can schedule a call to talk to me. I also want to offer you a free copy of an ebook that I wrote. It's a free download, Fix and Flip Profits, a guide for passive and active real estate investors. This resource looks at real estate as an asset class, looks briefly at different types of real estate, commercial real estate, different types of commercial real estate, and focuses on single family houses and how, as a private alternative asset class, fixing and flipping single family houses is an opportunity. So anyway, you can scan that QR code that will take you directly to the page where you can just fill out your name and email address and get an email sent to you with a link to download the Fix and Flip Profits. Or you can just go to alphadogcapital.com and you'll see it. It's very obvious on the site, on just about any page you go to on alphadogcapital.com. But the QR code will take you directly to that page to fill out the form and get that resource. So that's all for now. Thanks for listening. If you have any questions at all, definitely call me, text me, email me, and let's connect. Thanks.